What is the role of the executor in filing the estate tax return? Imagine being handed the keys to a complex financial puzzle after someone you care about passes away. That's essentially what an executor faces when it comes to estate tax return filing. The executor is the person legally responsible for managing the deceased person's estate and making sure all financial and legal duties are handled properly. One of those key duties is filing the estate tax return. The estate tax return is a form that reports the total value of the estate to the federal government and possibly state governments if applicable. If the estate's value exceeds the federal exemption amount, which is set at a specific threshold each year, the estate must file a federal estate tax return. As of now, the exemption is over $12 million. If the estate is below that, no estate tax return is needed. The executor must gather all relevant financial documents, including bank statements, property appraisals, and records of any gifts made before death. They then prepare and file the federal estate tax return, which is called Form 706. This form must be filed within 9 months after the date of death, though extensions can sometimes be requested. In addition to the federal return, the executor might need to file state estate tax returns, depending on where the deceased lived and the laws of that state. Some states have their own exemption limits and filing rules. It's important to check those deadlines and requirements carefully. The executor's job isn't just about filing paperwork. They also need to pay any estate taxes owed before distributing assets to beneficiaries. This means calculating the taxes, setting aside enough funds, and working with tax professionals if needed. They must keep detailed records of all transactions, payments, and filings to stay organized and avoid personal liability. Handling estate tax return filing can be complicated, especially if the estate involves multiple assets like real estate, investments, or business interests. Sometimes, the estate may generate income after death, requiring an estate income tax return, called Form 1041. The executor must also file that if applicable. In essence, the executor acts as the estate's financial steward, making sure all tax obligations are met accurately and on time. Failure to do so can lead to penalties or personal liability. That's why working with qualified tax professionals and legal advisors is often a smart move. They help ensure the estate complies with all tax laws and that the estate's assets are handled properly. So, in simple terms, the executor's role in filing the estate tax return is to gather all necessary financial information, prepare and submit the correct forms within deadlines, pay any taxes owed, and coordinate with experts to keep everything on track. This process helps honor the wishes of the deceased and keeps the estate administration running smoothly.